Gentlemen, great to have you with us. John, let me get your take on what we've seen so far. It seems like the market has come to grips. The tantrum that really started, I would say, when Twitter and Target declined by double-digit percents, seems a little bit like in the rearview mirror, at least for now. And I'm wondering what your take is on that.
Well, we'd have to think that the market usually overreacts to things when they happen. There's been a lot of overreaction this year. I mean, you'd think we were going to expensive money instead of just the end of free money in terms of what the Fed is doing. So the whole negotiation around Twitter and everything else is likely to have exaggerated moves on either end. But within reason, anytime Elon Musk is involved in something, there's a lot of outside the box kind of thinking. And I think the market's reaction on that certainly is reflective of just working with Musk.
Yeah. Is this a bear market rally that we're seeing, John? In other words, you don't think so?
Well, no, I don't think so. In that, if it is, I think the market is trying to tell us where it wants to go. I think we were in a bear market earlier. I think we're beginning to emerge from it. We could go back into it and get a bear market rally again. But this is not uncommon when you have a market that is coming out of, and a market and an economy that is coming out of a crisis, working through a process to navigate all kinds of transitions. And gosh, have we got them? Everything from the geopolitical to the highest inflation in 40 years, global trade supply, trade routes, all dysfunctional. Lots of challenges, but the overall effect is the Fed is beginning to do its job. And the proof will be going forward, how well are they doing? I think that's the key part. So the market will have its days of show me and have its days that it actually believes things are going to work out. But we think the overall trend will be a recovery process for this market.
Michael, where do you stand on chances for recession? It seems like with the jobs data on Friday, people are less worried about a near-term recession, but the glass half empty reading of that would be that maybe the Fed has to actually go harder later on, and that there is no reason for a pause after a couple of 50-point basis hikes, and so therefore the chance of a recession later on may actually increase.
Yeah, our baseline view is that we do have a soft landing late next year, but certainly the odds of a recession are definitely a lot more elevated than in a normal period. And I think the reason is, as you point out, we know that in June and July, the Fed's going to go 50 basis points. We don't think they pause after that. I think in September, they continue hiking, hopefully at a 25 basis point a meeting pace. But if the inflation developments and the labor market developments, for that matter, prove a little stickier and stronger than anticipated, I think we could see 50s continue into the third quarter. And then I think the odds of a recession next year would increase, and the odds of a soft landing look a little dicier if the Fed is going to be that aggressive.